You're a Citi holder. What do you think about the quarter?
Yeah, obviously the credit card number is a little weak, and that's been one of the key issues with the stock. So, but it's kind of a legacy issue because these teaser rates have been in place for probably the last 18 months. So I think as we get into it's disappointing, but as we get into the back half of the year, and they really pulled back on the teaser rates in Q1, we would expect hopefully those numbers to improve. But as Alison said, I mean, that's one of the key issues with the stock. And you know, investment banking numbers generally for them and JPM were pretty good. Trading numbers a little bit lighter for Citi, but they do have more currency trading and emerging markets, as Alison mentioned, so that does affect them.
And I just wanted to point out, too, that Citi reported a 7% drop in investment banking fees. When you are trying to make asset allocation, Kevin, how do you distinguish between, say, a JP Morgan and a Citi? I mean, why are you heavily invested in, say, Citi and the position on JP Morgan's a little bit lighter, maybe?
Yeah, and it's really, you know, honestly, what we think the potential is JP Morgan, as we saw in the earnings numbers, is really knocking the cover off the ball in almost every division. Whereas with Citi, you do have a turnaround within the card business. You're hoping for that profitability. The Costco business really should, if you think about that, when it was added, that's really starting to mature right now. So the profitability should be much better for them in the back half, having that contract for a period of time. But it really comes down to execution and then valuation. I mean, at Citi, you're paying about 1.5 less for those earnings. In addition, you know, you do have some of the emerging markets issues. But, you know, we said Citi's a little bit cheaper. They're returning, you know, over $20 billion of capital this year. So they're buying back roughly 10% of their stock in the forward 12 months. If they can execute on credit card, we think the stock's pretty attractive.
Alison?
And I guess, you know, the one thing I would add in terms of the investment bank fee discussion is mix, and you also have to look at the year ago comparison. So Citigroup, much stronger on the fixed side, much stronger debt franchise. They've been making progress on the equity side, but debt fees last year at this time were, you know, incredibly strong. And so I think most investors did expect to see some kind of decline in fees this quarter, but still healthy. And so you can't, I guess you can't get too clouded by the comparisons. I think in general, a good fee quarter for both.
Fair. What did you learn so far, Alison, about the deposit beta? I was interested in JP Morgan in particular. They raised their deposit by 25 basis points versus the 75 basis point hikes that we've seen from the Fed. So what did you learn from that? And then how competitive do you feel like these banks are getting or not?
So it does seem like that's on the margin, maybe getting a little more competitive. You know, we had, again, one data point from a smaller bank earlier this week. So I think that is something we're going to be increasingly looking at. I have not looked yet at what's happening at Wells Fargo, Bank of America. That's something also we're watching, but we're going to want to hear, I think, a little bit more about, you know, where the deposit competition is. We know there's deposit competition in wealth. We know there's there's obviously a higher beta in that business, a higher beta in the commercial business, but what's happening in the core retail business? You know, after 7 Fed rate hikes, we'd expect to see that starting to rise. We've come in better than expected so far, but is that finally changing?
So when you take a look, Kevin, at investing in banks, is your big question, say, for Jamie Dimon, for example, going to be macro or will it be micro? Because the S&P financials have kind of been moving together and not on idiosyncratic events. So how would you be thinking about them?
Yeah, I think you hit it right on the head. The issue with the banks right now, it's where the puck's going, not where it's been. So whether we talk about Citi, JP Morgan, or Wells Fargo, really the key issue in the back half is trade war. Most of the rest of the market, I think, generally has shrugged off some of these trade concerns. But within the banks, there's a high correlation with the yield curve. So the banks have underperformed, particularly in the second quarter right now. So they are kind of a prisoner, I would say, of these trade wars as the 10-year rates have come down, stocks have come down. If it's resolved, I think then people will continue to be optimistic, and you're going to have to listen on the calls for what Jamie and what Michael Corbat think loan growth will do in the second half, and is it being stymied by some of these trade concerns?